Hello and welcome to Wise Tech for Wise Money, brought to you today by A1 Solutions International. I'm your host Gary Wayne. On this podcast we speak with business leaders, entrepreneurs about their journeys, their problems, the problems they solve, how technology is changing their industries and what really takes to build a stronger and more valuable business. Today I'm joined by Julie Wilkinson, founder of Wilkinson Accounting Solutions and host of the Build and Exit podcast. Julie is a chartered management accountant, but her business goes far beyond traditional accounting. She and her team help establish businesses strengthen their financial controls, governance and risk management, giving leadership greater confidence in the numbers and preparing the company for growth acquisition, reduced owner dependency or an eventual exit. Hi Julie, welcome to the show. It's good to have you here.
Hi, thanks for having me.
You're normally the one on the other side. How does it feel to be the guest?
No, good. I haven't done a guest for a little while, so it's exciting.
Let's go back, as you said, you talk about your journey. Let's go back to how you got into finance, how you started Wilkinson's accounting, and just really where your journey began.
Yeah, so you did a nice intro there, so thank you. So for me, the background is I've worked in finance throughout my career. I'm a chartered management accountant by trade, and for about 20 years I worked in corporate, so large organisations, and financial controls and governance was just part of the corporate structure, effectively. So people that come from a corporate background probably know the hierarchy of structures and the controls. When I started with working with SMEs, I realised that it wasn't necessarily that owners didn't understand their numbers. It was often that they didn't have information that they trusted to make decisions. And it was one of the reasons why I started Wilkinson Accounting was because I saw a gap in the market where I realised that there was more need for SMEs to have a more understanding of finance than just sort of statutory and compliance. So within Wilkinson's, we work with ambitious owners to help them build finance functions that they can genuinely trust. So my background in management accounting that I mentioned earlier allowed me to look where leaders had technically correct accounts, yet they still lost confidence in the numbers. So we focus on giving leaders financial clarity, control and confidence so they can make better decisions and grow sustainably.
I mean, finance and compliance is quite a heavy subject. What made you actually attracted to it as a younger accountant?
Well, I fell into it. So in my corporate career, my focus was on sort of management reporting. So I business partnered across sort of the supply chain, working with the directors. What made me actually launch this sort of service was because in one of my corporates, I worked on a project, and that corporate had actually acquired multiple entities, and some of those entities were family-run businesses. My job was to incorporate those businesses into the group. So that was kind of like where my acquisition background came in. And what I realised when I was working on this project is that each family-run business had a really good business model. Because it was lacking, but it lacked like a base of control. So the owners were getting involved in everything from sort of sales to marketing to finance. And obviously my job in the corporate was to sort of streamline that and put the processes in. And then when I researched sort of the average SME market, I actually surveyed 20 business owners right at the beginning. I asked them what their accountants provided, and 100% saw their accounts once a year. So what I realised was that this wasn't like a one-off scenario from this acquisition. These family-run businesses, there's hundreds and thousands of them across the country, and they're lacking certain information that's allowing them to make decisions that they trust. So although technically I would be saying I put in internal controls, risk management and governance, what it's actually doing for business owners is giving them information they can trust to help them build their own sort of wealth and exit journey in their business.
Interesting. When you talk about SMEs, and I've done SME consulting, etc. in the past, obviously it covers a wide range of sizes of businesses. What sort of sizes do you actually typically deal with, and at what point in an SME's growth do they need your services?
Yeah, so I mean, I would say our typical range is between sort of 3 million and 20 million turnover. Um, our sort of approach, because we're moving more to finance becoming its own individual department, so we're looking at finance more than just sort of bookkeeping and year end. We work with clients where their reporting and their data is becoming more complex, because this is one of the things that I feel like I'm teaching through my podcast and all my asset creation online. But I think where the gap, my observations where the gap comes in finance is, I think a lot of SME business owners separate sort of commercial decisions from sort of finance tasks. So, they see their accountants as statutory and bookkeeping. Leaders are driving commercial decisions. Yet often there is a gap between what the financial information reports and what the leader understands. So that gap is what we bridge. So we're typically working with businesses between sort of 3 and 20 million, because we find that after 20 million, they're tending to go more corporate with their own sort of internal CFOs and, more often with investors and official board meetings. Whereas between that sort of 3 million and 20 million, it's still SMEs building their own departments with sort of maybe working with, part-time finance or external accountants and things like that.
Do you ever do sort of fractional CFO type work?
Yeah, I mean, our business models, we have access to all qualified finance professionals. So we have bookkeepers, finance assistants, finance managers, CFOs. We have a range of skill sets, but we don't traditionally offer, here's a CFO, 3 days a week, because we tend to work on project basis. So for our consultancy, so someone would come to us and say, I want to exit in 5 years. Often the initial discussions are, I need a management accounts, I need a forecast, cash flows, which is all relevant. But actually we go one step back and we do assessments, and we look at, that's fine, we can build those models, but can your system accurately input the data into those models so you can make the decisions? Because there's one thing having them, there's a second thing understanding them, and then there's a third thing, if you did want to exit, would a third party then be able to understand them? So, there's sort of 3 hierarchies to reporting. So we would do a bit more of an assessment. So it'd be very difficult just to go, well, you just need a CFO 3 days a week, because you might need project work at the beginning to develop, and then you would assess the requirement for the ongoing once the sort of, the implementation had happened.
So if I came to you as a client and said to you, look, I need you to look at my books, I'm not happy with the information I'm getting, I've not got no clear direction on where to go and what to do, how does the process start? And just talk me through the process from start to finish sort of thing.
Okay, so we would start by testing processes. So I actually have a quiz called Profit Leak Quiz, which is an online quiz that CEOs can take, and it asks 10 questions, and it basically gives them a risk score. So that risk score and it looks at key areas in their business. So we would look at 3 key areas. We'd look at what we call purchase to pay, which is everything from sort of ordering from a supplier to payment, and we would look at what risk is within that process. So could somebody make a fraudulent payment? Could they pay themselves? So we'd look at the end-to-end process. We look at debt and cash collection. So we look at, what's their debt process cycle like? So everything from sort of raising project agreements with customers all the way through to invoicing. And then we look at data and reporting. So we look at then how accurately does the information come out. So we have sort of 3 key areas. So what would effectively happen is if someone came to us and said, I don't trust my data, we'd start with the quiz, because the quiz gives the 10 questions. It only takes a couple of minutes to fill out, and it basically gives them a risk score and highlights the key areas of weakness. After that, we would then look at which of those three key areas is their biggest risk. It might be all of them, but we'd look at, we would do it in sections usually, and then we would effectively then assess the process. So if, for instance, a typical one is, I have a project management system, but when I get to the end of the month, the sales invoices haven't been raised correctly, as an example. Now, that issue is could be a mix of data flow across the business, not just a finance problem. It could be, well, it's the project management system. So that's like maybe a pain point they're feeling, but you have to assess to see where is that pain point breaking down in the process. So we would then assess that, effectively test that process end to end and look at where does the risk fall down and and usually it's in the reports or the financials, and then we would give the recommendations from there.
Do you actually put a system in place for people to follow step by step?
Yeah, that would usually, so it's a 3-step process. We would usually do assess, which we would then define, within the assessment would allow us to define what we find. Then we would do implementation. So if we needed to make changes, we would do an implementation phase. And then once the implementation's gone in, we would then say it moves on to business as usual. Once it becomes business as usual, that would usually be where we put the system in place, because whilst you're in assess and implementation, you're often defining the systems and processes. They're not there to follow. So we would do it like that. And then, but once the implementations happen, we would then say the risk has been mitigated or whatever, you've got the processes in place. And that's when we would then document, and they would have a system to follow.
So what happens after you step away? How many customers or business leaders follow your processes, or just let them gradually slip?
Well, I mean, often we do then stay on as retainers afterwards, because we do have, we effectively call it internal audit. So we effectively help people internal their risk management and their controls. Now that's, especially for businesses over 3 million, that isn't usually a one-time thing. It's an ongoing development, because a system that goes in place and a process that goes in place where maybe you've got 10 staff and you're 1 million is not probably going to be fit for purpose when you're 3 times bigger. So you do need to consistently audit and, internal audit and, review the system. So we find that actually, because it's not really just the owners. A lot of what we do, it does come with a bit of change, because we're changing systems and processes. So when we put in controls, it's usually company-wide. So it will be impacting more than the owners. So that's why it's not just we do it in like a day, because often there's a technical side to it, which is how do we fix the risk, but then there's a cultural side of it of, well, how do people know what to follow, and then how do we measure if they're following it? So that sort of gets defined in the implementation stage and then becomes BAU. But what's really powerful off the back of what we do, once it becomes business as usual, one of the key things we'll always put in place is making sure that people have got the right reporting to measure the risk outputs. Because the reason we find processes fall down is when leaders can't quantify. So they'll say, oh, I know this person's always doing things wrong, but I don't know what the issue is, or they go on and fix things themselves. So whilst we define the process, we look at, okay, so if you're going to measure, how would you measure if someone was following the process? And we make sure that the key areas that could cause the biggest risk will have some form of internal audit report. Who then runs them report and reviews them is then part of the decision of the business. But ultimately, because sometimes it may be finance, sometimes it may be commercial, but ultimately we'd make sure they were there so that as leaders, you can summarise reports and make decisions from them rather than having to doing things yourself.
Sounds really interesting. What are the early warning signs that a company's finance function has failed to keep pace with its growth? What do you see initially?
Yeah, I would say it's the pain points that people say. So I can reel off what people usually tell me they're feeling when they contact us. Usually it's I get a report from my system. It's telling me a margin, but I know it's not right. That's a gut feel. That's usually a big warning sign that something could be breaking down. That's one of them. And it is usually, I would say, probably on the sales side that people see that, because they're using like CRM reports or project management systems. They have these dashboards But then when they come to look at month-end numbers, the numbers never match the dashboards. So they know that there's some sort of risk there, and they spend hours trying to investigate it rather than actually, driving decisions. So that's probably one of the big ones. Another one is payments to suppliers. So the pain they usually feel is it's getting out of control. I'm getting invoices arrive in my inbox all the time. I'm getting accounts put on stop and I'm getting final demands, and I don't know if what I'm paying is correct on the purchase side. So that's the sales and the purchase. On the data and reporting, the biggest thing will be if you're having to manipulate reports. So what we find is leaders get given reports. The company has lots of reports, but nobody trusts the export from the system. They then spend 5 hours putting it into Excel and manipulating the data to then get a number. Now the risk with that, one, there's a high risk it could be wrong. No, it might not be, but there's a higher risk it is. But also it's the time and how quick you can make a decision. So I often say, obviously it's relevant to the size of the business, but I would say to someone, if you had to make £100,000 decision tomorrow, would you be able to make that decision off the data you got from the system on that day? And if the answer is no, then there is some form of break in the system reporting, and that makes you not be able to trust those numbers.
And what's the general answer? No.
No. Oh yeah, I would say, I believe over 75% of SMEs from my research, because I've spoken to thousands through my podcast and through all my surveys and research, I would say definitely over 75% of businesses have some form of risk in their reporting within one of those three areas of the business.
Do a lot of businesses, or do you get a lot of businesses that appear successful, they've got growing revenue, they're adding staff and clients, underneath there's problems mounting that they're just not seeing because they're so focused, on the actual expansion?
Oh yeah, and that's the biggest risk, and that is the biggest thing, is growth. And it's not because businesses aren't successful or they might collapse overnight. What we find is that the systems and the data behind the growth isn't keeping up with the growth. So that might be something like, let's say you have an owner founder that's grown really quickly in sort of 18 months and they've reached 1 million. Okay, if we look back to day one when they started, it was probably them and maybe a business partner, and they had a system where they contacted the customers, raised the invoices, did the checks and sent it. 18 months later, you now may have hundreds of customers, and the question is, what's the system? They may have hired someone, so they may have said, well, I've brought a bookkeeper in now or whatever, a finance assistant that raises the invoice. But if the original process relied on the owner knowing the customer and the project to raise the invoice, you may bring another person in, but does that person need to now be able to interpret that project to be able to invoice? Do you see what I mean?
Yeah, definitely.
So some of this is systems, but some of it is process. Because when it's reliant, so that's where when people exit and they struggle to sell, it's typically the reason, because it's not, is the business necessarily profitable and got sales, because we know the businesses are. It's what generates that profit and sales. Like, is it, and what's the risk of it falling down should one or two people move away from the process? Not even necessarily leave the business, but if they didn't do the job anymore, would the job still work?
A lot of business owners do well, but they still struggle with cash flow. Do you sort of advise them with invoice financing and factoring, etc.? What extent do you go to help them with that cash flow? Because they've probably got loads of orders, loads of money due in, but all of a sudden they're struggling to pay their bills.
Yeah, so we definitely help with cash flow strategies. I think what a lot of people are missing, this is where the opportunities are, is often we find that there is available cash flow that can be gathered very quickly from changing a few processes. I think now we're up to, what part of our internal audit and our assessments is to help people find opportunities. And I think right now we're up to over £1 million worth of opportunities we've identified for business owners through weak breaks, through gaps in systems. And what I mean by that is, like, when we do these assessments, we'll test processes, and there might be a cash flow shortage. The question is it really a cash flow long-term issue? Is there a, do you have a working capital issue right now because you haven't got great processes in getting cash, or you're paying too much cash out? So when we test the processes, we'll find the gaps. So this might be, as an example, we did one recently where we were testing the sales process, and in the first month we found £150,000 of sales invoices that hadn't been raised to the customers for a project 3 months ago that had been closed. Now, I'm not saying now, perhaps that company may have found that error at some point in the future, but the fact that it's now already been 3 months, if you haven't recouped £150,000, that's not a business struggling issue. That's a system glitch that stopped you getting 150,000. So before you start spending money on any financing, I'd be recommending the assessments of the key processes first to make sure, like, are you actually collecting your cash to maximising what you can be just from changing, relatively simple processes. Then if you've still got a cash back, then yes, absolutely, we'd say, what are some funding, we would help with recommendations on funding options. But funding is very expensive and high risk when perhaps you may not need it, if it could just be you need to focus a bit more on your internal processes.
You talk a lot about processes and systems, etc. Do you automate any of it using AI or any technology, or is it all done manually with Excel sheets, etc.?
No, we've been learning AI a lot over the last sort of 12 to 18 months, and one of the things we are helping people do now is put in AI finance as a tool to help with decisions, because part of the assessments we do is some people are already using AI, which is great, but the thing with AI, or I've found, obviously it's improving all the time, but ultimately you still have to implement something. So as an example, people will put their balance sheets and P&L and it will give them a board pack. That's fine, because perhaps that's automating the management accounts process that someone will do. Great, that's time efficient and probably lower cost. However, when you get the report, you still have to be able to action the report to then make the change. So whether someone produces a management accounts manually and says, well, your stock is lower than expected, has someone been stealing? You could probably come to that question if someone manually produced it or used AI. But then if you were going to say, well, how would I know if someone was stealing? That would then become a process you'd have to implement. Do you see what I mean? So the AI can get you so far, but you might then still need human intervention. So we use a mix, basically. We definitely use AI. We've cut processes by 8 hours a month end by using AI, by streamlining processes, because you should be able to streamline doing activities. My view is AI is doing 75% of the work well, so you can invest more time on the 25% to maximise your decisions.
When you go into a company, what's the most common financial or operational weakness you discover?
Usually purchasing, in terms of people not following a purchase order process. So we find that, especially heavy manufacturing businesses and things like that. So what's happened, and this would be a prime example of where systems have developed without a process. So there's lots of good systems. So there's a Xero or a cash flow or whatever ERP system you use, finance system you're using, and there's also a project management tool. Now people are meant to raise purchase orders with suppliers, but they bypass it. So then invoices come in with no purchase order. Then the managing director's still getting the invoices, so they're still making the payments about the purchase order because it's just happening all the time. And when we test those processes, one time about 5 months ago, we did a test and we found that a business had overpaid £500,000 in suppliers. And when we tested this handful of documents and then went to the supplier actually came back and went, well, why are you querying it? You've paid it now. So we find duplicate payments and overpayments quite a common theme. Not necessarily because it's not because the system, the company's completely broken, but it's because within each process there might be 10 people involved, and how are you controlling what those 10 people do in terms of, do they understand how their actions have the financial consequence on the business? So it is a bit of financially educating employees to understand that their decisions have financial consequences. That's how the owner eventually can step away and rely that the business can run financially without them, is to make sure that all key individuals understand how their key decisions impact finances.
So do you do a lot of in-house training for companies?
Yeah, part of when we do these assessments, and I'll say in the implementation phase, part of the implementation phase would be key policies and rollout. Now, who that's with would be dependent on the culture and, sort of, I suppose, the hierarchy of staff, because typically we'd start with leadership teams. Leadership teams have to lead by example. So we would be starting with leadership teams to say, these are the key policies. Now that might be 2 people, it could be 10 people, ultimately. Then they'd decide the rollout to the wider organisation. So we often find things like where businesses have evolved and everybody's got a company credit card. Every project guy's got a company credit card. There's 15 of them and they just spend whatever they want, whenever they want. You've got to control that. You've got to, either remove the cards or, mitigate what they can spend on it, so that people start following the processes. So it is a bit about people management, because often we find people are criticising the employees, they're not doing it right. But actually sometimes it's not the person, it's just the process. So they've always been allowed to do certain things. But as the business grows, the exposure becomes worse. So what might have been okay when your 5% risk is low might now not be okay when your 5% risk is a lot higher because your business is bigger. But that's not the person. That's effectively the business has allowed a process to now expose them to risk. So we step away from individuals at first and we look at systems and process. Does it work? Is it fit for purpose? Have you got high risk? If there is, we fix those gaps first and we make sure that they have the right controls that anybody could follow in that business. Obviously, you then have to roll out and people have to follow those, and we make sure people have the reporting so that they can measure. Obviously, then, if employees still don't follow, maybe you are talking about performance management, but we sort of take that sort of, I suppose, individual element out of it and look more top level in terms of, what's your big risk as a company? Are you exposing yourself?
So once you've identified that, you then have to put a system in for the problems longer term to make sure, it runs smoothly, having solved the initial bigger problems. How do you introduce stronger controls without creating bureaucracy and slowing business down and causing upset within the company amongst the staff? I know from experience running big teams in the past how anti-change people are.
Yeah, and that's why it's not always a quick thing. I'm not going to sit here and say everything happens in 1 or 2 months. The truth is sometimes you could be looking at a 12-month process for some of these things if there was big, cultural things you had to change. But, it's risk versus reward at the end of the day. So what we always look for first is quick wins. So, let's just say so the first thing is to identify, does someone do something? So let's just say somebody says, I never know the value of my stock, right? Let's just say that's one of the problems, because that is a common problem we find. Well, the first question is, do you have a stock system? If they say, no, I don't have a stock system, to go straight in and go, well, I'm going to implement a stock system, you're looking at a 9-month project. It's probably not fit for purpose in the short term. So the short term, we look at, okay, so what's the quickest win we can put in now that's going to have the less minimal impact, but still give you a better analysis than you had to start with. So it might not be all singing, all dancing system first. Sometimes Excel spreadsheets are fit for purpose in an interim to allow for you to sort of test processes and make sure they work. Because the other risk is people start spending £15,000 on a stock system that doesn't work, which also isn't really good. So the first thing would then be, who would be the best person to run the stock system in the company now? Is it in their role? Do they have capacity for it, or do you need a new person? Okay, that would be the sort of analysis we'd look. Do you have someone? Would they take it on? Have they got capacity, or would you need a new person? Because that's part of your budget analysis, right? That comes part of the project. It's not just the cost of implementing the system. It's also the cost of, well, what do you need to run the system, right? So we look at that. Now, let's just say they go, yeah, we've got Emma in, in the warehouse that's going to love doing the spreadsheet. So you pick the person with the best skill who's going to like to do it. And basically you then bring them in. So, we would help them build what the stock model should look like. We would write a simple process that they should follow and would go starting point, do this. How do you test it's working? You do a stock count at the end of month. You test that process for 3 months. Every month you count that stock. If it matches, the process works. If it doesn't match, it doesn't work. We need to change the process. After maybe 6 months, you might go, this is laborious. There's too much risk going wrong. Now we need a system. Now you might bring the stock system in, because actually what you already do, you can build into a system relatively quickly. The risk would be if you didn't test it for the 3 months and you went to spend £15,000 on a stock system for those 3 months trial, and then you realise it didn't work. That's where you tend to find people try and make the system fit the process because of the money they've spent. So I would always recommend, if you've got a potentially large project that might cost a lot in systems, I would always test it first on more simple processes to make sure it works. Because the last thing you want to do is spend thousands of pounds on a process that isn't going to be fit for purpose. That's in simple terms how it would work. And then there could be a multitude of those things. Now, there's no real cultural issue there, because the cultural issue would come if you didn't have a person, okay? Then you have to decide, well, do you hire someone? But actually, if you find the right person who's going to enjoy doing the activity and you can incentivize them, obviously I'm not saying everyone should take everything for free, but relook at their role, put it in, test processes. There is no real cultural problem, because you're ultimately doing it with the person that fits that role anyway, naturally.
Do you specialise in a niche, or you just talk to SMEs on the whole?
No, I'd say our niche really is the area of specialism of what we do in terms of this internal audit. In terms of industry, we work with most industries because actually similar problems occur in all industries. Obviously, the risk and the complexity is slightly different. For example, some industries might not have stock or purchase orders, but if they don't, they often still have finance integrity issues, because we find with service-based, it comes with things like, is your project actually profitable? How do you make payment plans on projects to make sure customers pay in full, you don't overcharge them or undercharge them and things like that. So where one company might have problems with a stock system, the other company industry, it might not be relevant, but they'd have other challenges. So typically the 3 key areas relate to all industries. They just more magnified depending on, what industry they are and what the risk level is.
So do you have clients, obviously you work on projects and you work on overall audit, etc. and processes, but you have a client who's, he's a client of yours, he's thinking about doing something. He's got an idea, but he doesn't know how to formulate it. Will he give you a buzz and say, look, Julie, I've got this idea, but I actually just don't know how to put it together and how to move it forward. Can you help me? Yeah,
definitely. And that's where we do the assessment, because this is where I suppose we differ from what you might call the fractional CFO. The challenge I see with fractional CFOs is they're very high cost. And the question really is, once the business gets a better data set, I'm not saying they never need a CFO, but the question is, how long would they need them for? And are they really needed long term for as many days? So the problem when you commit to just 3 days a week of a CFO forever, it's like, okay, but what, especially with AI coming in, it's like, is that CFO needed forever? So I suppose that's where our niche comes in, that's why we work off project basis first. So where there's these ideas, we don't necessarily, it doesn't necessarily mean it's a massive project across the whole business. We'll take little sections, like the stock as the example, or it could just be one report that's not working, and someone will go, can you have a look at it? And we will just start there. So we take it in smaller chunks and we look at the process. And that's why we focus on first fixing the process, because I think I said it earlier. My observation is, sometimes CEOs and managing directors might think, I need a CFO because I can't understand the finances. I actually believe often it's because they don't have the data, not the fact that they don't understand it.
Yeah,
now,
I think you're right.
See what I mean?
Yeah,
now, there may
definitely
be some scenarios where they definitely need CFOs, like, if you've got heavy investments or you've got board teams that you have to do official board packs. Yeah, fair enough, you may need the CFO, but on an average SME business that, doesn't have investors or have any complex board reporting as such, I actually think it's a better investment to invest on fixing the process and systems first, and then you can assess what the team is. So one of the things we will look at people with is what financial infrastructure do they need? So what finance support do they need, short term and long term? And we can help them build a bit of a higher, a bit of a scale to say this might be when you need a CFO, this might be when you need, but you don't really know that unless you actually do the assessment first.
Yeah, no, it makes sense. And obviously, if you've got the data and access to it and it's organised, you can actually work out what it's talking and saying yourself.
Yeah, because the truth is, like, people needing to know what's my gross margin or my net margin. I mean, yeah, you can have fancy board reports and, if you've got investors, you might want to send that to a board. But ultimately, the question you're asking there is it's a commercial decision. It's not really a tax decision. So if it's a commercial decision, the managing directors and the leaders are the right people to be answering it. The question will be, can they trust the margin? Now, if they can't trust the margin, the CFO is not going to change that because it's not the person delivering the information that has that, they don't impact that. It's the system that impacts that. So you can bring all the people on you want, but ultimately if your inputs are poor and your outputs are poor and the data's poor, then it doesn't matter who produces it, you're still not going to trust it.
Yeah, no, I agree. So tell me about Wilkinson's as a firm. You said you're a niche boutique with a team of around 8 or 9. What have you built that you've built? Tell me about the specialist capabilities that sit within it.
Yeah, so...
And how you split up the work.
Yeah, so I mean, because we do statutory and compliance work too. So because ultimately, often people will like everything under one roof. So this is how it typically works. We have project accountants, we have finance managers, and we have tax specialists. And when someone comes to us with a problem and we do the assessment, at that stage we would assess, is it a project or is it a bit of a retainer that we're going to implement relatively quickly and it becomes sort of an ongoing. So we sort of separate it between what I call the retainers and then the projects. So then once we've done the assessment and we sign that, then they get given sort of like an account manager. Now that the account manager for the project, for instance, would be different unless it was the tax specialist, if you see what I mean. So the reason we have tax specialists is because when we do a lot of group structures, so a lot of what we do is helping people build group reporting. So a lot of the questions are, how do I move my cash? There's a tax question, but there's also a risk question. Where's the best place for me to hold my assets? Now, those two questions can be simultaneous, so you kind of need to have all the knowledge together. So we can consolidate things and make sure that the whole project gets dealt with. So if someone comes and says, I want a holding company because I'm doing an acquisition, if you only look at the tax, you miss the risk of the asset maximisation. But if you only look at the assets, you risk the tax issue. Often you can't look at things in silo. It's not just, I need my tax to be lower, so I want to go and invest. I'm going to go and buy that asset to lower my tax. It's one strategy, but is it the right strategy? You need to be able to go, I've got a cash portfolio of this. These are my future investments. This is my tax bill. Where do I best invest my money? So I maximise my cash flow, lower my risk of needing finance, and maximise my returns. And so we bring together projects, so we look at all the areas rather than only silo focusing on certain areas.
But do you work in teams, or do you have independent people within your team who are specialists in certain areas?
Well, everyone's specialists in certain areas, but sometimes the specialists work together on a project.
Right, okay.
So in that scenario, if we were looking at, I've just acquired a business and I need to put a group in place, within there you could have 3 different areas. You could have, what's the tax implications? You could have, what systems do I need in place? And then what's the ongoing finance requirements? And that could be a mix of a bookkeeper, a project accountant and a tax specialist. So everyone's specialist, but we would decide who comes together on the project to work together.
You do acquisitions and you do exits as well as other stuff. So if someone comes to you and they're buying a company that looks like it's about to go into liquidation, and they've managed to do a deal to save it from a liquidator, how often or how usual is it that if they called you in to do an analysis on the company they've just bought that looks like it's on its last legs, that you actually find hidden revenue streams and opportunities that the old owners have actually totally lost control of, and the company's actually not in as bad shape as it seemed?
Yeah, and that's a possibility. We find all sorts. I suppose, look, the one thing I say, I mean, I've done an acquisition. I acquired a business myself, and I've got a lot of the people I've interviewed on the Build and Exit have acquired. So there's lots of guests that are on that podcast if people want to listen to stories. But I think for me, the biggest thing is contingency and risk management. I mean, ultimately, if you're buying a business that's in liquidation, there's two potential scenarios from there. There's one, there's more risk than you think, and the business is going to fold a lot quicker. Right? That's one scenario. Doesn't mean it's going to happen. The second scenario is you find lots of opportunities and you can improve it. You don't know necessarily at the point you acquire it, right? Because part of the acquisition is it takes 6 to 12 months to embed it. So the point is, what is your risk mitigation strategy in those 12 months? What's your margin of safety? What would need to happen for the business to fold, and what would need to happen for the business to excel? As long as you know key numbers, you can then you should be able to manage those numbers and mitigate the risks. I think the biggest challenge is not being aware, because your financial statements at year end will only show you 25% of the information. All these things we talk about, systems and risks, you won't be seeing them in due diligence. It's very unlikely that you're going to see all of that in due diligence. Doesn't mean you don't do the deal, but it puts a higher level of risk on the deal. And if you don't have enough contingency off the back of it, that's when you risk going into administration yourself. And as the new shareholder, you're then legally liable for those liabilities and risks. So, it's for directors. You do get personal liabilities on these things depending on how big the acquisition is, even if you buy it for £1, because you're not looking necessarily at what did I buy it for, you're looking at what's my exposure to my creditors.
Sure. Yeah, do you do a lot of work on startups?
We've done assessments and startups, so we do quite a lot of assessments, because we do get people come to us and says, I don't know if I've got the right reporting that's fit for purpose. That might be a question we get asked. And now, sometimes we just know we'll do the little project and it may not be a longer term retainer at that point, if you see what I mean. So we have done some work with startups. And I do believe the earlier you put these things in place, the better. I would be recommending.
Without doubt, and that was going to lead to my next question, because a lot of people, there's a fact out there, and I'm not sure what the exact percentage is. Somewhere like 80 or 90% of startups fail in the first 3 to 5 years. If that's a fact, why do they fail in 3 to 5 years?
Wow, there's loads. I mean, I've just been reading a few books recently, like things like Atomic Habits and things like that. I mean, statistically, it fails because of cash flow. I suppose underpinning that, the question comes, why does the cash flow become a risk? It's the why. And the truth is, it doesn't happen. It's not cash flow in its own right as a thing. It's all these small operational glitches and too much reliance on one person that actually causes probably the cash flow glitch at the end. Because, ultimately nobody goes into business necessarily without, most people go in with a business model that is, effectively doable, I would say. Whether they plan it or not, though, is another question. So when costs rise quickly, because we know, especially at the minute, costs are futile. So what might work when before, if your costs rise by 5%, what happens? So I think for me, especially for startups, I would say scenario planning is probably the biggest thing, because you need to scenario different 4 or 5 scenarios to say, if this happened, what would happen to my business? If this happened, what would happen to my cash? Because I don't always think it's the business model that fails for the cash flow to cease. I think it's situations in the business and the economy that then impact the business because they don't have the right strategies in place to fix it quickly.
So who can put those strategies in place for them? Do they have to hire a professional? Because I think the biggest dilemma is with a startup, is they're starting something normally on the back of their ability and expertise, but they don't always have all the experience in running a business, and they don't have enough spare cash then to go and hire someone like you maybe to go and say, look, these are the systems you need to make sure you're successful.
Yeah, I mean, you're not going to, some of the things we've talked about today are quite big assessments, and obviously it's need, it's the need for the business at the time. So, a smaller business wouldn't need some of these big assessments that we're talking about because they could put it in from the beginning. I think you're right. I understand the challenge for startup businesses, the cash flow. However, I would challenge, if you haven't got enough profit to pay the right people to do the jobs, you haven't got the right business model to start with. Because if you were pricing correctly, you would price for all of the people needed to run the business. Now, regardless of who does it, whether it's a freelance bookkeeper, your finance assistant, whatever that person is, whether it's one person that's got that can do all the skills, that's a decision you make of who you hire. But it doesn't matter. Commercially, there's certain things you need. You need good books, some form of reports, whether that be a system or a manual, but you still need someone to run those systems. A spreadsheet is actually still a system. It's still a process. It's just, does it work? Now, if you're starting a business and well, I don't know how to use Excel and I don't know anything about finances, then the starting point should be, I'm going to need a finance expert. If you can't afford a finance expert in your plan, you haven't got the right business model to start with.
All right.
And you need to reassess your pricing from the beginning, so you increase your prices so you can afford the finance person. Now, whether that's, I'm not always saying that's going to be us, because there are some companies that we may not be right for at that stage, but an assessment is useful because the assessments are probably the cheaper part of the process, and the easiest, because the assessment tells you what you need to do. Who you then choose to implement it, we don't sometimes after we've done an assessment, we'll actually say, you don't need us to implement this, you've got the people to implement it. It's not always about we have to do everything, but the assessment will tell you. Then it's the implementation where you decide who does it.
Yeah, no, it's good. That's good advice and good structure. Tell me, what's your ideal client today, your typical ICB?
Well, I would say typically over 3 million turnover, that has some of the pain points I talked about earlier. So, feels that they get reports but don't trust the numbers. Or if they're not sure, do they spend a lot of time fixing data all the time, like exporting things? They get a spreadsheet and then they redo it because they know, they think that the numbers are wrong, so they fix it. Or feel like the tasks they do are getting bigger because the business is getting too big and they need to offload it, but they don't know how because they worry the process will break down if they give it to someone. If people have got those 3 pain points, they can have those 3 pain points under 3 million. If you've got the 3 pain points, that's when you need us. But we typically find businesses are over 3 million when they get to those pain points and it becomes a massive issue.
Moving on to your show, Build and Exit. Tell me what made you start that, and what the purpose is, and is it a marketing tool, or is it just education, or is it for you to learn? Tell me a little bit about the purpose of it and what you cover in it.
Yeah, I'm actually writing a book at the minute. I think for me, all of my online assets, such as my social media, my podcast, and everything that I do, my quizzes, is really for educational purposes. Obviously, they do generate leads because people get results and they need help with those results, or they see something they've got a problem with and they come. But for me, I am really passionate. My overall mission is to help business owners build financial wealth. And I believe there's too many businesses, really good businesses in the UK, that are folding or the owners not exiting for what they deserve. And it's not because the business they've set up it fails. It's because they can't sell it because they don't have a good infrastructure for that business. And I think it's a shame. So the reason I put out all my assets, including the podcast, is for education, because I think it's important. I think what I do is niche, and I think I come from it from an angle that a lot of people have never looked at finance in this way. And, I get messages all the time from people say, oh my God, that changed. I put this in place and I changed my business and things like that. So I think first and foremost for me, it is education for people. I think it's hard to run businesses, and I think finance is its own niche area. And unless you have worked in it, or you're qualified in it, or you understand it, you don't know what you don't know, do you? So that's why I'm here helping people of what they could look for. And that's why I talk about the pain points, because for me, it's how people feel at the end of the day. And I know from my conversations, the way people feel, they're not sleeping at night and they're worrying, and it's all solvable, but it just needs a bit of structure.
What's the book about? What's the book title?
Well, I don't know. I haven't finished it. I don't know the title yet. It's going to be all about financial controls and everything on what I've talked about today in the podcast. I'm bringing a lot of case studies together, because obviously I've got all of the projects we've done and the podcast, and I'm going to consolidate it all in sort of an educational book to help people with real life examples, really.
As a company with sort of 8 or 9 people, how many clients can you take on at any one time? I mean, the work you describe sounds quite intense. Does it limit your capability of how many customers you can look after at any one time?
Yeah, I mean, I think we're a boutique firm, definitely, of what we do. I mean, the projects can sound quite intimidating, but actually the way we structure it, we do it in small segments. So it's not overwhelming for people, because we lead the projects. And that's why we would break it in. Often people come to us with 10 things. I need to do all of this. And we're just like, we need to roadmap this, because it's going to be too much to implement it all in one go. I mean, at the minute, I think, we've got about 80 clients, and we can, because we have, not every client has a major project all the time. The whole reason people work with us is because we don't give them a CFO fee of £1,000 a day for 3 days a week when they don't need it. We have a retainer base that's bespoke to the person, off the size of the business they are now. And then they understand we're here to help. And then when the project needs comes up, we have interim discussions, and then they may go, right, I now want to, their overall goal might be, I want to exit in 5 years. But, that's a big goal. It's what's the interim fixes we need to put in place so you get there without the stress. So then, as the time comes, I need a stock system, we do the project. I need to improve my sales system, we do the project. I've got this problem with the purchase order system, we do the project. Do you see what I mean? So it can be little projects, or it can be big projects. And that's, how we work, really. So I'd say between sort of 70 and 80 clients. And obviously we could have more if I grow the business, but we just assess based off the project at the time and the client, really. But our aim, really, regardless of the number of clients, is to take our clients on a journey. Over 75% of all of our clients are going on some form of exit journey, whether that be they just want to work less hours in the business, and sometimes it's that, sometimes they want it to hand it down to family, a legacy business, and sometimes they want to sell it. Regardless of what that reason is, I would say over 75% of our clients are going on one of those journeys, and ultimately we help them build the infrastructure they need to get there.
Before we wrap up, what's the future plans for Wilkinson's accounting?
Just to help as many, I want to help thousands of people all over the world improve their wealth through their business. So, keep educating, help getting our clients on successful exits. And alongside that, I'm obviously building my assets, which is obviously me, not just in the company, but me personally, think with the build and exit, to keep educating and helping people along the way, really.
If you had to give business owners only one piece of advice, what would it be?
Don't bring a CFO in immediately, and don't buy a system immediately. It would be the two.
All right, Julie. Well, it's been really good having you on here. How can people learn about you and Wilkinson Accounting Solutions? How can they get hold of you? Where can they find the Build and Exit podcast? How can they become a guest on your podcast?
Yeah, so I've got a website, Wilkinson Accounting Solutions. I'm mostly active on LinkedIn under my profile, Julie Wilkinson. And the Build and Exit is on YouTube, Spotify and Apple as the main channels. So it's video and audio. The website, the contact details are on the website. So, but it's accounts@wilkinsonaccountingsolutions.co.uk. if anyone wants to email.
Okay, that's great. Well, I want to thank you for being a guest on my podcast. It's been a pleasure having you. I'd like to talk to you again in a minute. I want to thank all the listeners for listening in. I think Julie's service is paramount, I think, for any business, startups, exits, and acquisitions. I think it's just so key. It's great to understand what you do. I think there's a big need for it, and I think you should have more than 100 clients out there that need your services. Thanks again for being on the show. I'm signing off now. Gary Wayne, A1 Solutions. Thank you for being a guest today, Julie, and thank you for listening in to the listeners. Thank you.